Imagine a world where anyone, anywhere in the world can access financial services without having to rely on a bank or other trusted third party. Sounds like a dream, right? Well, it's actually closer to reality than you might think. Enter decentralized finance, a revolutionary new way of providing financial services that is changing the game for both businesses and consumers alike. So what exactly is decentralized finance, and how does it work? In Ethereum, to enable peer-to-peer transactions without the need for a central authority, such as a bank or other financial institution. Instead, these services are provided by smart contracts, which are essentially pieces of code that automate the execution of an agreement between two parties. When you make a transaction, it is broadcast to the network and verified by multiple computers. Once verified, the transaction is added to a block, which is then chained to previous blocks, creating an immutable record of all transactions. Anyone with an internet connection and a smartphone can access DeFi applications and services, regardless of their location or financial status. This opens up a world of opportunities for people who have been excluded from the traditional financial system due to factors such as lack of documentation, credit history, or collateral. This eliminates the need for a central authority to oversee and validate transactions, since the network does it collectively. This allows for faster, more secure, and more transparent transactions at a fraction of the cost when compared to traditional methods. These exchanges operate using smart contracts that facilitate the buying and selling of crypto assets. For example, Uniswap is a decentralized exchange that allows users to swap one cryptocurrency for another directly from their wallets. Let's take a deep dive into this exciting new development in the world of finance. These platforms match lenders with borrowers and facilitate the loan process using smart contracts. Anyone with an internet connection and a smartphone can access DeFi applications and services, regardless of their location or financial status. Since decentralized finance utilizes the blockchain to facilitate transactions, there is no need for a central authority to oversee and validate transactions. This results in faster transaction times and lower fees compared to traditional methods. Additionally, the use of smart contracts eliminates the need for intermediaries such as brokers or agents, further reducing costs and increasing efficiency. This opens up a world of opportunities for people who have been excluded from the traditional financial system due to factors such as lack of documentation, credit history, or collateral. While DeFi aims to make financial services more accessible, the technical complexity of DeFi applications can be a barrier to entry for some users. New DeFi applications and services are emerging all the time, and it can be challenging for users to evaluate the risks and benefits of each one. As the technology matures and more users and developers enter the space, we can expect to see more innovative applications and services emerge. The potential for decentralized finance to disrupt. The traditional financial industry is huge, and the future looks bright for this exciting new development in the world of finance. Many DeFi applications require users to have a basic understanding of blockchain technology and cryptography, which can be daunting for those who are not tech-savvy. Experiment with different applications and services, and invest only what you can afford to lose. As you gain more experience and confidence, you can gradually increase your investments. Follow industry news, read about new developments, and attend webinars or workshops to enhance your knowledge. We encourage you to explore the resources we have provided to learn more about decentralized finance and its potential impact on the future of finance. Do not forget to hit that like button and subscribe to our channel for more informative videos on a variety of topics. Thanks for watching, and we look forward to seeing you in our next video. By staying informed, you can make better decisions about where to invest your money and how to manage your investments. The use of cryptography and decentralization makes it extremely difficult for hackers to compromise the network, providing greater security for users. First, do your research and understand the risks involved. Like any investment, it's important to do your research and understand the risks before getting involved. Read about decentralized finance, learn about the different applications and services available, and be aware of the potential risks before investing your money. They are used to tokenize real-world assets such as artwork and collectibles and can be traded on decentralized marketplaces. The decentralized nature of DeFi makes it difficult for regulators to oversee and enforce compliance with financial regulations. This has led to concerns about the legality of certain DeFi applications and the potential risks for investors. A hardware wallet is a physical device that stores your private keys offline, providing enhanced security. Software wallet is a digital wallet that stores your private keys on your computer or smartphone. Choose a wallet that is secure and easy to use and ensure that it supports the cryptocurrencies you plan to use. Similarly, when choosing an exchange, look for one that is reputable and has a good track record. For example, OpenSea is a popular NFT marketplace where users can buy, sell, and trade NFTs. For example, Compound is a lending and borrowing platform that allows users to earn interest on their crypto assets or borrow against them. They are used to speculate on the future price of an asset or to hedge against potential losses. For example, options and futures are popular derivatives used in the DeFi space. Before we get started, make sure to hit that subscribe button so you never miss out on our latest videos. They are used to reduce volatility in the DeFi space and provide a more stable store of value. For example, Tether and USD Coin are two popular stablecoins used in DeFi. What is decentralized finance? Decentralized finance, often referred to as DeFi, is a form of financial service that utilizes the blockchain, the same technology behind cryptocurrencies like Bitcoin. How does decentralized finance work? At the core of decentralized finance is the blockchain, a distributed ledger that records all transactions across multiple computers, making it nearly impossible to tamper with. DeFi applications are typically built on top of existing blockchains such as Ethereum, which provides a platform for developers to create and deploy smart contracts. Smart contracts are self-executing agreements that can enforce the terms of a contract between two parties without the need for a third party. They are stored on the blockchain and once executed cannot be altered or canceled. This allows for greater transparency and trust between parties, as the terms of the agreement are publicly viewable on the blockchain. One of the key benefits of decentralized finance is that it allows for greater financial inclusion by providing access to financial services for people who may not have access to traditional banking services. Let's take a look at some examples of decentralized finance applications. Decentralized exchanges, also known as DEXs, allow users to trade cryptocurrencies directly with each other, without the need for a centralized exchange. Lending and borrowing platforms allow users to lend or borrow cryptocurrencies by putting up their crypto assets as collateral. Stablecoins are cryptocurrencies that are pegged to the value of a stable asset such as the US dollar. Crypto derivatives are financial instruments that derive their value from an underlying asset such as a cryptocurrency. Non-fungible tokens, also known as NFTs, are unique digital assets that represent ownership of a particular item. The benefits of decentralized finance. One of the main benefits of decentralized finance is that it allows for greater financial inclusion by providing access to financial services for people who may not have access to traditional banking services. Another benefit of decentralized finance is that it allows for faster and more cost-effective transactions. Decentralized finance also offers greater transparency and security. All transactions are recorded on the public blockchain, which allows for greater transparency and accountability. However, despite the many benefits of decentralized finance, there are also some challenges that need to be addressed. One of the main challenges is the regulatory uncertainty surrounding DeFi applications. Another challenge is the complexity of DeFi applications. In addition, decentralized finance is still relatively new, and the space is constantly evolving, which can make it difficult for users to keep up with the latest trends and developments. Despite these challenges, decentralized finance is poised for growth and innovation. Here are some tips for getting started with decentralized finance. If you're interested in exploring decentralized finance, here are some tips to help you get started. Start small and build up gradually. When you're first starting out with decentralized finance, it's best to start small and build up gradually. Use a reputable wallet and exchange. It's important to use a reputable wallet and exchange when dealing with decentralized finance. Stay informed and keep learning. The world of decentralized finance is constantly evolving, and it's important to stay informed and keep learning. As we wrap up this video on decentralized finance, we hope you have gained a better understanding of this exciting new development in the world of finance. As we wrap up this video on decentralized finance, we hope you have gained a better understanding of this exciting new development in the world of finance.